Bitcoin should trade at parity to gold in terms of market capitalization, which means that it could easily go from 85,000 a coin to 850,000 a coin during this cycle.
Max Keiser kicks things off with a striking statement. The global fiat system is collapsing. According to him, we're witnessing a massive shift, a quiet revolution, as people abandon traditional currencies and embrace a parallel financial world powered by Bitcoin. Unlike fiat, this new economy is built on mathematics, immutable code, and digital scarcity, not on reckless spending or political manipulation. Keiser warns that the US dollar is following in the footsteps of the British pound, losing its status as the world's reserve currency. As inflation eats away at your purchasing power and trust in fiat crumbles, more and more people are moving their wealth into hard assets, especially gold and, increasingly, Bitcoin. This shift is happening now. The question is, are you ahead of the curve or falling behind? If you're ready to understand where the world is headed financially, smash that like button, subscribe to the channel, and hit the notification bell so you never miss an update. We dive deep into crypto, digital assets, and the future of money. Don't miss out. Drop your thoughts in the comments. We'd love to hear your take on the death of fiat and the rise of Bitcoin. Every interaction helps us beat the algorithm and reach more truth seekers like you. Thanks for watching. And now, let's get into it.
The world's population is realizing the shortcomings of fiat money and gold, and they're seceding from the global economy, and they're joining the Bitcoin economy. So Bitcoin economy and the global economy is an emergent parallel global economy that's challenging the old world order with a Bitcoin standard. And to your point, yes, it would mean the dollar would no longer be world reserve currency, and the dollar would go the same way as the British pound and all the other currencies that were the world reserve currency going back 300 years for a period of time before they gave way to something better. And Bitcoin is better. So in my view, the US dollar is on its last legs. It will no longer be the world reserve currency. The value of the Bitcoin, the dollar inflation in the United States will continue to rise. There'll be no curtailing of that inflation. And people will go to Bitcoin. We already see now in this realization hitting a lot of people. That's why the price of gold just hit a new all-time high of 3,100, right? It was trading at around 15, 16, 1,700 for years. Now it's at 3,100, and gold is looking to go to 4, 5, 6,000 because people are getting rid of the paper money because there's no cure for the debt that is plaguing the globe. The planet Earth, it has the highest debt to GDP ratio ever in history. I believe it's over 300%, which is absolutely enormous. And so people are really frightened that this debt spiral will completely collapse the value of their paper money. So they're moving into gold and they're moving into Bitcoin. And if you're moving into gold to escape the ravages of fiat money inflation, you should buy Bitcoin instead, because as Paul Tudor Jones, very famous hedge fund manager, has said, Bitcoin is the fastest horse in the race. Bitcoin is the best hedge against inflation. For every dollar that gold goes up, Bitcoin will go up $20 in value. So it's really the place to be if you want to escape now the end game of the experiment of central banks that began 300 years ago with the Bank of England. That's now collapsing. It's over. It didn't work. Economies couldn't handle it. The governments couldn't stop printing too much money to pay for too many bad programs. And now it's collapsing, and it's causing incredible chaos all over the world. But that's what happens when you transition to a whole new paradigm. If you have your retirement account and you want to outrun inflation, right? So inflation is something that is eating up your return. You want to outrun your inflation. Well, the stock market typically returns something like 7% a year. That's the average annual rate of return in the stock market. And inflation is really running a lot higher than 7%. You know, the reported inflation is cherry picking numbers to make it a lot lower than it actually is. If you were to calculate inflation based on stuff that people actually buy, like healthcare and education and housing, the actual inflation rate is closer to 15%. So you have to make 15% a year in the stock market just to break even, which most people don't do that. Warren Buffett's annual rate of return is roughly 22, 23%. That's really the only thing Warren has delivered over the past 30 years of his career, which incidentally doesn't really beat the market by much at all. at all. So there's the stock market's not really going to get you there. The bond market, well, we're at the end of a bond bull market that started in 1980 under Reagan, and it ran from 1980 to 2022. And the bond market rally that started in 1980 ended in 2022 when the Russia-Ukraine conflict kicked off. So the bond market's now entered into a bear market. It's in a protracted cyclical bear market. So the bond market's definitely not the place you want to be. So then there's gold. Well, gold's been acting great because it's an inflation hedge and it's going to keep up with inflation. If you want to maintain parity with inflation in retirement, gold will get you to that place where you're not getting eaten to death in your retirement by rising inflation, but it won't do better than inflation. Enter Bitcoin. Bitcoin will actually outpace inflation and outpace gold substantially. So you can actually increase your net worth even in retirement if you're not working, if your expenses are capped and not extravagant, and you're just letting Bitcoin compound at its very high rate of return as the world pours all of the available resources into Bitcoin. So Bitcoin should trade at parity to gold in terms of market capitalization, which means that it could easily go from 85,000 a coin to 850,000 a coin during this cycle. So say the next 5 years. So you got 1,000% return in 5 years, I think is a reasonable expectation for Bitcoin as it achieves parity in market capitalization with gold, which it definitely should because it does everything gold does, but it does it better. Gold is not going to hurt you.
Yeah. Gold's not going to hurt you. Okay.
It's been reliable for 5,000 years, and it has recently broken out of a kind of a sideways move. It's very interesting to study the gold market, Jimmy, because the gold price gets suppressed. It hasn't been allowed to really have price discovery, free price discovery for years, and the same thing in the silver market, because it does the Wall Street brokers and bankers don't want gold to do well because it's competition for them. And so they use derivatives to suppress the price of gold and silver. And the way that they do that is every time somebody shows up in the futures market to buy, let's say, $100,000 worth of gold futures contracts, Wall Street will counterfeit and sell $1 million worth of gold futures contract at the market to crash the price. So counterfeiting futures contracts is another counterfeiting scheme. It's called naked short selling. It's technically illegal, but it's widespread. It's one of those things where there's a law in the book, but the law is not enforced. So naked short selling is illegal, but it's done quite regularly. And this has been the way to keep the price of gold and silver down for years. But what's happened is people are so afraid of the inflation genie having come out of the bottle now that they're going to the futures exchange and they're demanding physical delivery. So you can't play that game. You can't sell naked shorts and have the same impact. So the price of gold has been unleashed. It's now finding its true price discovery. So the gold, 3,000, 4,000, 5,000, that's what we're going to see in this cycle. But with Bitcoin, you have, it's built on what are called private keys, and those private keys are held privately. And they're not as subject to manipulation in the futures markets as you would find in the gold market. It's truly decentralized. So you don't have the same risks and problems that you do in the precious metal markets. You do see some of it because volatility equals profit on Wall Street. So if you can create profitability, if you're in Wall Street, you can create a lot of profits.
Michael Saylor's strategy isn't just bold, it's accretive. He's taking borrowed capital and flipping it into Bitcoin, a scarce, appreciating asset. As a result, MicroStrategy now holds over 500,000 BTC, with Saylor openly aiming for 1 million coins. Max Keiser draws a powerful comparison. This is the modern-day equivalent of George Soros's legendary 1992 assault on the British pound, the move that shattered the Bank of England. But this time, it's bigger. Saylor isn't just targeting one currency. He's taking on the entire fiat system, and he's doing it with capitalism's own weapons: stocks, bonds, and balance sheets. This isn't just a bet, it's an all-out financial revolution. If this kind of strategic power play fascinates you, hit that like button, subscribe, and turn on notifications. We're breaking down moves that are reshaping the global economy in real time. Share your thoughts below. Do you think Saylor is the Soros of Bitcoin? Every comment helps push this message further and feeds the algorithm. Let's wake more people up to what's really happening. Now let's dive deeper into the Bitcoin blueprint.
Yes, it's true. Warren Buffett is raising cash. He's got over $300 billion in cash. It's his largest cash position, really, in memory. He has the Buffett rule, which is that any time the stock market gets more than 100% in value relative to the GDP of the United States, stocks are overvalued. Well, stock market recently went to 2 times GDP valuation. So it went 2 times the Buffett rule. So just following his own discipline, he's lightening up on stocks and going into cash. The only thing the stock market's good for is for somebody like a Michael Saylor. I don't know if you know the name Michael Saylor, but he runs a company called MicroStrategy, now called Strategy. And what they figured out is that in order to keep the stock market bubbly, the central bank took rates way low. As a matter of fact, they went basically to zero.
Interest rates, you mean?
Interest rates, yes. Yeah. And so what Michael Saylor did starting in 2020 was he had 100 million or so on the balance sheet of cash. And he figured out that even if he was getting 3 or 4 or 5% of interest rate at the bank, inflation was higher and he's got a negative return at the end of the year. So he's put all of his money into Bitcoin when it was approximately $10,000 per Bitcoin. And what he's been doing is, and the market capitalization of his entire company was roughly under $2 billion. And what Michael Saylor came up with an ingenious plan, because he's been selling his own stock into the market and selling his own debt into the market, which normally, if you're into economics or finance, you would say, well, that's dilutive and it'll make the stock price go down. But he's been using 100% of the proceeds to buy Bitcoin. So it's actually not dilutive, it's accretive. So now his company's worth almost $100 billion. And he's been buying Bitcoin. He now owns over 500,000 Bitcoin. They are going to try to buy 1 million Bitcoin. And so he's using the stock market to attack the stock market, if you will. It's called a speculative attack. We saw the same thing in the early 90s when George Soros broke the Bank of England. He borrowed money from the bank to destroy the bank. And he made $1 billion. So now Michael Saylor has taken that lesson on and made it 100 times bigger. He's using the stock market effectively to kill the stock market. Because if everyone and every day companies are announcing, we're doing the Saylor Plan, we're doing the Saylor Plan, which means that, like GameStop just announced a few days ago that they had $5 billion on their balance sheet doing nothing. They're going to now start buying Bitcoin. There's a company in Japan called Metaplanet that's been doing this now for over a year. They're the best performing stock in Japan. There are companies in South America now doing this, the Saylor Plan. They are using the tools of capitalism to kill capitalism, exactly as Marx predicted, right? So they are simply using the cheap money available in this incredibly overinflated, indebted world of finance to borrow cheap to buy Bitcoin. And the average rate of Bitcoin appreciation over the past 5 or 6 years is, 50% a year. So even if you're paying, 6 or 7%, you're making an incredible spread on the arbitrage. And of course, they're borrowing at a lot less than that. They're borrowing close to 0%. So that's the only good use of the stock market right now, are corporations using the market to fund their Bitcoin purchases. And we're seeing that happen in MicroStrategy stock. It's a very interesting stock. I would encourage your viewers who are stock traders to look at it more closely. I think you'll find it a very interesting story. And once again, this is not financial advice.
Max Keiser points to a rising global trend. Companies everywhere, from GameStop in the US to Metaplanet in Japan, are now following the Saylor playbook. They're leveraging their corporate balance sheets and capital market access to quietly stack Bitcoin. Even firms in South America are jumping in. The strategy? Use cheap, inflationary capital handed out by central banks to buy the one asset those same banks can't print: Bitcoin. This is the modern financial power move. Accumulate sound money before the fiat house of cards comes crashing down. What we're witnessing is no longer isolated. It's a global shift. If you want to stay ahead of this financial revolution, smash that like button, subscribe, and turn on notifications so you don't miss a beat. Drop your thoughts in the comments. Is this the beginning of Bitcoin becoming the new global standard? Your engagement fuels the channel and helps spread awareness. Let's get into how this quiet corporate Bitcoin accumulation could change everything.